Hello, I'm Hickey from interest.co.nz and welcome to the Roost Home Loan Affordability Reports for August. They show a slight deterioration in home loan affordability because of an increase in the median house price. Let's firstly explain how these home loan affordability reports work. And you can find a link to these in the article underneath this video. These are reports prepared by interest.co and sponsored by Roost Mortgage Brokers. What they do is work out how much of your after-tax income is needed to service a typical loan on a typical house for both single income earners and a couple of income earners. And we use the median income, we use the median house price, and for first home buyers, the first quartile house price and the median income for those people who are younger first home buyers. And what we've found this month compared to last month is that there's been a slight worsening of home loan affordability. When you look at how much of a median after-tax income is needed to service an 80% home loan on a median house in New Zealand, remember these are medians across the country for incomes and for house prices, you now need about 53.5% of after-tax income. That's up from 52.4% in July. Now this is pretty much down to higher house prices. We've seen the median house price in New Zealand in August rise to $370,000. That's up from $361,000 in July. Now that's just below the record high we saw in June of $372,000. Now let's have a look at the charts for home loan affordability, sponsored by Roost Mortgage Brokers, which you can see here on the bottom of the article underneath the video. And it can show you what's happening nationally and what's happening across the nation. So let's have a look here at what's happened to home loan affordability in the long run. You can see here that through the housing boom, as house prices rose and interest rates rose through 2006 and 7, that affordability worsened. Remember, the higher the line goes, the less affordable a home loan is. So we get up to a peak of around about 80% of after-tax pay to service a typical mortgage on a typical house with just one income. That's pretty tough. And then as interest rates slumped and house prices fell through 2009, we saw a significant improvement. And it bottomed out there at about 54%. We saw it worsen through late 2009, 2010, as there was a slight increase in interest rates, and also we saw a slight rebound in house prices. But we've really come off and settled down at these levels here, which are around the most affordable in the last 4 or 5 years or so. And you can see here there's a slight blip up in August from July, but not much change there really. We're sort of bumping along the bottom at around about that 53% mark nationally. Slightly different picture when you go down to the regions. And remember, the blue line is where the national level is, and the red line shows you where you are in your region. And it gives you a sense of how affordable versus the national average we've got affordability. And you can see a significant improvement in Northland compared to the rest of the country. Prices have come off quite a bit there in the last 3 or 4 years. Auckland, however, of course, is much less affordable. The red line well above the blue line compared to the nation. And if anything, that gap has gotten wider in the last 6 to 12 months or so. And we're up around that 69% level, bit of a blip up in August from July. Some areas are much more affordable, and you can see here with the likes of Hawke's Bay, significant improvement in affordability to record low levels. You're getting back to the levels we saw in 2003 or so. Manawatu, very cheap to live in Manawatu, and a fall in house prices has seen an improvement in affordability there. When you look at Canterbury, though, obviously a shortage of supply has seen a real change there in affordability, and whereas previously Canterbury was quite a bit above the or more affordable than the rest of the country, it's really spiked up a bit recently, and that's because of the shortage of supply with the earthquake. So there we have it. The overall picture is of affordability worsening slightly in August from July. Obviously, affordability is toughest in Auckland, Wellington and Christchurch. There's been some improvements in Manawatu, Otago and Whanganui. And overall, the things driving the market at the moment are obviously low interest rates. And we're seeing fixed rates, 1 and 2 year rates, down around that 5% mark, Kiwibank spurred things along this week with a special deal, and ANZ National have responded. We'll see where the other banks come in, so plenty of competition between the banks. And on the fixed versus floating front, more people are choosing to fix at the moment with some of these very low deals for fixed interest rates and starting to go out quite long term, 2 years for 4.99% from the likes of Kiwibank. But for those who believe that interest rates are low and are going to stay low for a significant period, then floating seems to make sense. Remember, the rates outlook officially at the moment is the Reserve Bank doesn't see the interest rates rising until towards the end of next year. In fact, some economists are saying that may not rise until 2014. The broad outlook is that we're seeing the global economic picture fairly dark, particularly in Europe and China, and even in the United States. And in New Zealand, we've got a few bright spots with the Christchurch rebuild and with some higher commodity prices, particularly for dairy, taking the pain off a higher currency. And obviously the housing market in Auckland and in Christchurch is perking up a bit. So there we have it, the Roost Home Loan Affordability Report for August. You can see all the details for your regions in the links underneath this video. I'm Bernard Hickey for interest.co.nz.